GM, good morning. Welcome to the Milk Road Show, the daily crypto show that knows that your dream is to get rich and immediately move somewhere with less people and better Wi Fi. I'm your host, Jay Hamilton. It's Monday, April the 21st. Happy Easter, everybody. I hope you all had a great long weekend. Now, lots of people say never sell your Bitcoin. But if you never sell it, how are you supposed to profit from it? Are you just going to leave it all to your kids when you die and never see a dime yourself? I mean, I love my kid, but let's be realistic, folks. So today's episode is all about looking at how you can get access to the gains from your Bitcoin and other crypto for that matter without ever selling it. We sit down with Adam Reed, CEO and co-founder of Ledn, one of the largest centralized lending platforms in the world. They've done over 6 trillion in crypto loans since their formation back in 2018. This episode, we don't just talk about Bitcoin or crypto lending. We also get a really wide ranging perspective from Adam as an OG builder in the space. He's been here for so long. He's worked with so many people. He's been through bull cycles, bear cycles. He's seen the rise and fall. He's seen some of his competitors fail and the impact that that has on the industry. So we talk about a wide range of stuff. We talk about Bitcoin. We talk about price predictions. We talk about CeFi versus DeFi. Adam was super honest and upfront with us about not just promoting his own platform for crypto loans, but also what do you need to think about if you're going to take out a crypto loan? Should you use centralized? Should you use decentralized? What are the advantages to each? A really helpful episode today. You guys are going to absolutely love it. Now, before we jump in and hear from Adam, please, please, please do me a favor because it's Easter and we're all giving back. We're all feeling the love and we're hyped up on chocolate, or your kids are definitely hyped up on chocolate. Give me some love in return with a little bit of a review or a subscribe or a like on whatever platform you're listening on. Really, really helps the show if you guys pump up that algorithm a little bit. So appreciate your time on that. Now, today's episode is brought to you by MoonPay. Trade crypto fee-free, fast, and on your terms. It's also brought to you by Coinshift, powering top crypto treasuries with their yield-bearing stablecoin, CSUSDL. Without further ado, let's jump in and hear from Adam. Adam, what's going on, my man? Welcome to the Milk Road Show.
Thanks so much, Jay. So great to see you again.
Yeah, man. This is a rare opportunity. I don't get to everybody listening. And Adam and I went to university together. We did business school together. Like 20 years ago. I think I graduated 2008. You graduated a year before me. I think 2007. Is
Yeah,
that right?
that did concur. So yeah, I graduated 2008 as well.
That's right. Wow.
Yep.
So here we are almost 20 years later, both building businesses in crypto, you building Ledn, which is doing fantastically well. Incredible. Okay. There's so much to dive into in today's episode, but I want to start with a theme that we've been talking a lot about on the show recently, and we've been talking about both directions, which is Bitcoin finally making its move from trading like a risk on asset to trading like a risk off asset and following more gold. You know, Bitcoin is digital gold. Gold is flying right now as a result of a lot of people moving risk off because of all the tariffs and uncertainty in the markets. We don't need to get into any of that. If you want to learn about that, go back to yesterday's episode where we had a lot of conversation around the macro setup. But right now, there is this conversation, and it happens every cycle, and you've been through many cycles, so this isn't your first time seeing this, where everyone loves to bring up the like, okay, is this the moment where Bitcoin finally decouples
Yeah.
from US risk assets? What are your thoughts? Do you think we're finally seeing that moment? There's a lot of differences in this cycle and differences in regulation and things that are coming that might make this. I really want to manifest this. I think that's why I want to talk about it so much right now.
Right, of course.
What do you think?
Yeah, it is so interesting, right? And I think what we forget, obviously, speaking from Canada, the US, is a lot of individuals, and especially on the retail side, can't buy US stocks, or it's very difficult for them to buy US stocks. But Bitcoin, trades globally, right? It's an asset that's available to someone in Nigeria versus, and also available to someone sitting in Wall Street, New York. So I think, that's what makes it, so unique, is you have this global, speculation that's happening all the time on price, and not only, from different countries, but also a 24/7 market. All right. Unlike our traditional market hours, 9:30 to 4, you can look at this thing, you can take a view any time of the day from anywhere in the world. And I think as adoption increases, we're of course going to see that decoupling happening because of that, separation and just completely different distribution and availability.
Yeah. It feels like if you're if you're a macro trader, and do not become a macro trader if you're not a macro trader, everybody listening. A lot of people are trying to become macro traders right now. Don't change your mandate, don't change your strategy, stick to your guns. But if you're a macro trader, gold is the trade right now. Like that feels
Mhm.
fairly clear. And so the question becomes, what's the next trade? And the next trade feels like it's Bitcoin. It feels very obvious. And right now, and I'd like to get your take on this because you travel the world and speak at conferences and speak to institutions all the time. And I've never before seen so many institutions interested in Bitcoin on a lot of levels, right? Corporations putting on their balance sheet, institution money institutions, large pension funds buying it in order to hold it as a reserve asset, Abu Dhabi buying it. Like I've never, it feels like there's a wave of new flows and new buyers. And a lot of that started with the ETF. And then
Yep.
you
Mhm.
combine that with a risk off environment, and liquidity is picking up right now, and global liquidity is picking up, and it just and then as you said, you have all of this money outside of the US, outside of the Americas, that can't invest in US stocks. Plus right now, quite honestly, there seems to be a lowering confidence in America right now, and a lack and trust has been breached around the world. And it sort of just I really keep coming back to this thought that, like, what do you buy? Well, you buy Bitcoin. It feels like the obvious buy for a lot of people and a lot of institutions. I really wonder, because I don't want to. I know in the past when people have made the call like, oh, Bitcoin is decoupling, then like literally it marks a local top and like a week later it falls. So I don't massacre me if a week from now Bitcoin drops. I do not know what's going to happen in the short term, but it feels like it's heading that direction. Let's talk about regulation. Is a big has a big impact on your business, and it obviously has a big impact on crypto in America. What's been, from your seat, what's happened over the last 5 years in terms of businesses moving out of America, and then what do you see happening as regulation comes in the next? I mean, could it come in the next few months? It sounds like it's going to come pretty quickly here.
Yeah, so I think, a year ago we were having board meetings about, how do we make sure we can grow outside of the US? And I think that was the benefit of starting as a Canadian company. As you know as well, you always grow up kind of looking at this giant neighbor, right next to you, but you also understand that the world's a big place. And there's a lot of activity happening everywhere. So we were looking at, the Middle East, we are looking at other regions, trying to figure out how can we grow more quickly in markets that we were not deep in yet. And now it's completely flipped where we're saying, how quickly can we grow in the US again? And not only is that, at the retail client level that, we're focused on and helping more people use our services, but it's also on the funding side of our business at the institutional level. And I think, what's happening is what regulatory clarity does is it helps remove career risk, right? And I think this is an important piece for institutions is what was happening before was, I think, you've got probably younger people in organizations that are more interested in the asset class coming in and saying, can I make a mark on this and trying to get, their ideas up in the digital asset space at senior levels. And now I think it's flipping where it's no longer a career risk to be talking about it. It's probably a career risk not to be talking about it. And I think that's like a really, really interesting change in that if you don't have a digital asset or, Bitcoin strategy today, you're probably, not going to move that fast, in your career at large organizations because it's such an important piece and it's so disruptive and an area where you can do really, really well or get left behind if you're not focused on it.
Let's talk a little bit about the lending side of Bitcoin. Give us some numbers here. How big is lending within Bitcoin? And if you were to compare it to other asset classes, other store of value asset classes.
Yeah, of course. So there was a report that Galaxy just put out that talked about some of the size of it. I like to talk about the retail lending side of
Mhm.
Bitcoin and how many individuals are using and posting Bitcoin as collateral and not borrowing it and you start using it to borrow. We think today that that space is around $2 to $3 billion of people not wanting to sell their Bitcoin, which is so
That's it.
small.
That's so
When
small.
yeah, when you think about and that's just because I think we're at the early stages of it because of a couple things, right? I think again, with the market cap of Bitcoin being, about 1.5 trillion, it's a really, really small amount of Bitcoin that's used for, retail borrowing. So I think people maybe don't know it exists yet. I think that's, a big part of it is, it really is inventing a new category. And secondly, people may be nervous to borrow against it because of the volatility of Bitcoin. The understanding that if the Bitcoin price does decrease, you do need to post more collateral to avoid margin calls and liquidations and that. But I think like as that stabilizes and as the mindset switches from okay, this is a speculative asset to like no, this is global digital permissionless secure effectively real estate. I think that'll change, right? Analogy I love is the amount of financing in the US on residential mortgages is about 60%. So 60% of residential homes have a mortgage on them. And so think about that in Bitcoin terms of that changes. So if people start to use their Bitcoin like they use real estate for, savings vehicle, saving for their first home, saving, this asset that they're never going to touch, they're always going to build up this nest egg over time. Then they start to take, loans against it as they need liquidity. If that moves from, a couple percentage points as at today to 60%, the lending market opens up massively, right? And so we're excited about that. The piece that just came out, did place Ledn in the top three of lenders globally alongside Galaxy and Tether, and they're more focused on the institutional side. So we're actually the largest of the names on the retail side. So excited to be really helping to create a new category for lending on Bitcoin.
Let's be honest, everything in crypto comes with fees. But here's a nice surprise: MoonPay Balance doesn't take a cut. You heard that right. No MoonPay fees when you buy or sell crypto with your MoonPay Balance. Top up with dollars, pounds, or euros, then you're ready to trade instantly whenever the market moves. And if you change your mind, withdraw your cash. No MoonPay fee there either. Simple, fast, ready when you are. Check it out at milkroad.com/MoonPay. Disclaimer: network and ecosystem fees apply. Meet CSUSDL, the stablecoin built for institutions and DAOs. Don't just hold basic stablecoins, earn yield, all without compromising security. Backed by regulated real-world assets and secured with institutional-grade risk management by our friends at Stakehouse Financial, put your treasury cash to work, earning native yield and protocol rewards. Built by the team behind Coinshift, which is trusted to manage over 1 billion in business treasuries on chain, including Aave, Gitcoin, and hundreds of leading institutions, CYCSUSDL is gaining traction at milkroad.com/Coinshift. That's awesome to see. It feels like, I mean, that number is just like the TAM is so large, but the activity is still so small. Obviously, as you said, the volatility has a big impact, and even just the customer awareness as well. I'm sure self-custody still has a big impact, right?
For
Because
sure. Yeah.
a lot of the and we don't need to get, I want to talk about self-custody and how you guys think about that, but let's leave that for a little bit later in the show. Right now, I want to chat about, let's rewind for a second. You got your start mining Bitcoin in what year did you start mining?
2016.
Okay, 2016, you started mining. And once you started mining, you felt like, okay, I want to keep all this Bitcoin. And this is the same thing that everybody, whether you're a miner or whether you're just an investor, once you get Bitcoin, I think most people really get it in their head that the never sell is a very real belief. And everybody buys into that, that like, I'm
That's
long,
it.
right? I
Yep.
don't know,
Yep.
what I don't remove the volatility. I'm long. I'm here for the long term. Whether you believe in, this year predictions range from 150 to 250K, assuming the macro side figures itself out and we don't go into like an absolute death spiral and a China US trade war goes out of control. If that happens, all bets are off. But let's assume we're looking good this year. And then people, lots of predictions, Vanek or maybe it was Bitwise predicted 1 million Bitcoin in the next 5 years. I mean, some people are predicting 1 million Bitcoin in this year, which is absolutely insane. I don't think we can flip gold that fast. But so you want to hold your Bitcoin. You started mining, you want to hold it. You figured, okay, how do I monetize this, right? How do I monetize this today? I'm guessing this is like the story of, is this how Ledn was all started? This belief that
That's
like,
exactly it. We were trying to cover our expenses in the mining operation, and but that we were forced to sell Bitcoin, and you never time it properly, right? Like it's impossible to time. So
Mhm.
you have real expenses, we had electricity costs, rent for the data warehouse that we were in to cover in the mining operation, and we just thought, wouldn't there be a way? Isn't there a way better way to set this up where we can access like a line of credit style financing by using the Bitcoin that we're generating as collateral? And so we looked at it. The other piece that I often explain to our clients is, lending is a two-sided marketplace, right? You've got the individual or institution putting up the capital to lend, and you've got the individual who wants to borrow it. And everything, like, in a market is about balancing. And so you have to create terms that allow for both of those activities to occur and both people that want to transact. So you have to make the borrower or the lender feel secure. You have to make the borrower who's putting up collateral feel secure, and you have to have terms that are fair and work for both. And someone willing to pay a rate of interest, someone willing to part with their capital at that rate of interest, and put it together. So that was a lot of what we analyzed when we created the product, is understanding those pieces and understanding how to get that balancing right. And I think diving into the self custody piece, because that's what we really have to get our clients comfortable, right? Is where's
Mhm.
my Bitcoin sitting when I'm taking a loan? How do I know that you're not going to lose my Bitcoin? You're storing it safe and
Yeah, because let's
securely.
just be clear for
Yeah.
everybody listening in here. If
Yeah.
you take out a Bitcoin loan on Ledn, you give custody of your Bitcoin to Ledn.
You
Like,
do. Yes, you
the
do.
key
Yeah.
fact everyone needs to understand.
Yeah, so you retain the price appreciation in Bitcoin, right? Like, the
Mhm.
Bitcoin is effectively, you get your Bitcoin back when you repay. There's no kind of, fancy things happening with it, but you're right. You're giving up your private keys. You are sending your Bitcoin to Ledn to facilitate that. And there is some interesting models in market, just to give the full spectrum of availability for clients that are interested in this. Is there are, tri-party agreements. So a group like Unchained, who does a really good job out of in the US and Texas. They have a great product that allows for multi-signature. And then there is, more DeFi models that have, DLC contracts and other things like that that take advantage of different things available on Bitcoin contracts. And there's full DeFi that, you may have to wrap your Bitcoin to participate in an Ethereum or Solana-based contract, but you can do that as well. And each has its pluses and minuses, right? And so I think, what I always talk to about that's probably less aware for clients looking at it is, how do you fund that, right? And so that's a piece that we spend a lot of time on and try to get that hybrid right, because access to capital is huge. The space is really, really, really still short dollars. We haven't yet recovered from losing Silvergate, from losing Signature, from losing Genesis, these really big crypto behemoths that were offering dollar loans into the space. And because of that, we're spending a lot of time educating institutions to say, hey, this is why you should lend, millions of dollars to our clients and help get the rates down, right? Like the rates are still relatively
Interesting.
high.
So it's
Yeah.
that side that is struggling right now.
Yeah,
Interesting.
exactly. We
Okay.
we have tons of supply, and we're working. Or sorry, we have tons of demand. We have supply. Obviously, we are lending. We are in
Yeah,
market.
yeah.
We have hundreds of millions of dollars available to lend, as we see in our volumes. But we know that eventually, the space is going to be short. So we have to keep educating more institutions to come into that. And it's how you hold Bitcoin and how you get them comfortable with it. Again, is a balance. So as
Mhm.
much as I'd love to put all client Bitcoin in a tri-party contract and use all of the amazing features that are available on the Bitcoin blockchain, to secure that, I have to get the institutional or individual who's putting up capital comfortable with that as well, right? So they're going to want to say, like, hey, if this client doesn't pay back their Bitcoin backed loan, how can I realize that collateral, sell it? And understanding how that sits and getting even comfortable with some of the maybe smart contract or different risks that exist, it is a hurdle, right? And so the easiest thing is to send that institution the collateral, put it up in a custodian that we both agree to, that is vetted, that's secure. We do use BitGo as an example for the majority of our custody operations, and get them comfortable that way. So
And
it's a
Bitgo
learning.
Bitgo
Yeah.
custodies how much? It's so I can't remember the number, but I know it's very
Yeah,
high.
them alongside Coinbase would be the largest,
Yeah.
custodians in the space. Yeah, so that kind of underlying piece of it is, the space is not yet set up so that there's not standardization, right? So like as you're getting someone comfortable participating in the Bitcoin lending space, it's not like the, credit card financing or auto loan market where it's been done for now, tens, almost, probably 100 years, obviously not quite 100 years, but,
Mm.
30 to 50 years at least. And there's, sophistication, there's known practices, there's rating agencies like that's the piece behind that there's a lot of education still to bring in different groups into this and to get them up to speed on it. So yeah,
One thing
complexity
that we
behind the doors.
one thing that we don't talk a ton about on the show is the Bitcoin economy. And I think the reason we don't talk a ton about it on the show is we talk a lot about Bitcoin. It's because the Bitcoin economy is still mostly institutions and mostly it's centralized. It's not on crypto rails, right? And you can't. And actually, you know what the other thing is? You can't invest in it through tokens, right? There's not a lot of Bitcoin economy businesses that started with a TGE. Most of
That's
them
it.
did traditional fundraising, right?
Yep.
We had Dan Tapiero on the show. I know he's invested in Ledn. Like these are the funders. So there's this difference. And with our show, we talk so much about the crypto native side, but this what is going on with the Bitcoin economy is just when we had James Lavish on the show earlier this week. He's got the Bitcoin Opportunity Fund, and it seems like it's such a big piece of what is going to happen in the next 10 years is this evolution. As you said, there's only such a small percentage of retail that is lending their Bitcoin, but 60% of American households are lending against their house, right?
Right.
And
Yeah.
let me ask you this. Do you save in Bitcoin?
I absolutely do. Yeah, I own no stocks. I'm all Bitcoin. Of course, my Ledn equity, and just focus on. It really keeps things simple, right? I think that's
Yeah.
an undersold aspect of getting into the Bitcoin space is like once you only save in Bitcoin, you actually clear up a lot of mental bandwidth of like how am I going to allocate? What am I going to do that way, right? Obviously, those not yet in the space would argue that that's lack of diversification, and I would argue otherwise. I think it's I'm very happy with the direction it's going. I understand. I obviously like to think I understand the risk or lack of risk that I'm taking, but
Mhm.
by doing so, and happy with
Lack of
happy with
risk. Lack of
yeah,
risk. Yeah, yeah,
yeah,
yeah, yeah.
mhm,
Risk adjusted for sure.
yeah.
It's okay. So let's talk about getting a loan here. So I've never done a Bitcoin back loan. Okay. Let's say I've got one Bitcoin and I want to do a loan. Walk me through what this looks like, what I need to think about, how it might happen.
Of course. So signing up for Ledn is very similar to signing up for a Bitcoin exchange or other ways you may have participated in the Bitcoin economy today. So you're going to create an account, username, email, a password, 2FA, important to set up for account security. And then we do KYC our clients. We are a regulated entity, so we have to do that for compliance purposes. So we KYC everyone on the platform. We use software to do that. It's relatively quick. It can all be done in less than 5 or 10 minutes if everything's available. So once the account is created, the account is confirmed from a KYC perspective, you can apply for a loan. And applying for a loan is really straightforward. We have a calculator on the platform that shows you how much you can borrow. It's 2 to 1. So if you want to borrow $10,000, you have to post $20,000 of Bitcoin at current
Okay.
pricing, and you specify the amount you'd like to borrow. It specifies the amount of Bitcoin collateral you need to send, and then we have a unique address. That unique address is BitGo custody, so you're sending your Bitcoin directly into BitGo custody, and then once you've done that, we can fund the loan, and we process loans within 24 hours. Our average loan processing time is about 8 hours today, so that usually
Wow.
amazes people. Is like
That is
sometimes
amazing. That is
yeah,
amazing.
like I mean, for those that have gone into a bank, like think about the
Yeah.
time
Yeah.
it's going to take you to get a residential mortgage, the amount of paperwork, the amount of background, and that's just because we're dealing with an asset that's unique, right? It's the same to everyone globally. I love that we can offer similar rates and services to everyone globally because Bitcoin is equal. Right, it's the ultimate equalizer. It doesn't care where you are, who you are. We don't do credit checks, so that's an important thing on the platform.
That's
And
super
again,
cool, actually. We don't
yeah,
we don't we don't focus on this use case of crypto enough because quite frankly, because our audience is mostly in the developed world, and so we talk mostly about the developed world. But if you want access to financial products and you're in the undeveloped world, you're in India, like billions of people in India, and you want to get a loan or do something like this, it's not easy. Like there, you might not even have a
Yeah.
bank account, right? Like this is
Yeah.
this is massive.
Yeah, I spend a lot of time in Latin America, and
Yeah.
loans in Latin America are for the wealthy, right? And so they're for those often that have assets, outside of the country that they're even in because of, challenges with property rights, right? Even, if you go to buy, luxury properties in countries, in Latin America, a lot of times the financing just doesn't make sense, right? The rates and terms will be much higher, and so there is not the availability of credit because of that. And so a lot of times when we are offering loans to clients outside of U.S., Canada, Western Europe, it may be the first loan they've ever been approved for, which is pretty cool, right? And so,
That's super
that's
cool. That's
yeah,
super
it's an
cool.
interesting, like, I think it's like, yeah, you matter. You have an asset that's valuable. We can treat you fairly. We can treat you with respect. We can treat you the same as other people and not disadvantage you just because of the passport that you hold.
Mhm. Okay, let's come back to the loan here. Okay, so uh, I've got I want 50. Let's say I want 40,000 because that roughly works out to one Bitcoin right now. So
Sure. Yeah.
so I want 40,000. I go through your process. I give custody of my one Bitcoin over to you. I get $40,000 in cash back.
Exactly.
Okay,
Yeah.
what happens next? What's the interest rate on it? How does the payback work? What happens if I get margin called? At what point would I get
Sure.
margin called? Let's go through that.
Well, I'll first just also say, we can disperse the loan into a bank account. That's obviously the most common use cases. We're just wiring US dollars to a bank
Right.
account of the client's
Right,
choice.
right. Okay, so most people
Yeah.
don't want stable coins.
Yeah,
Interesting.
we do actually, we offer stable coins as well. So we can disperse in USDC, USDT, and or we can also disperse in local currency. So if someone's taking a loan from Mexico, we can disperse in Mexican peso. So lots of availability. Basically, we just want to get you the currency in the
I could
format of
take
your
Canadian
choice.
dollars then,
You,
basically,
you
if
can
I
take
want.
Canadian
Not that I
dollars.
necessarily
Exactly.
want Canadian
Yeah,
dollars
yeah,
right
yeah.
now, to be honest, but
Exactly. Yeah, yeah. 100%. And so, but the loan importantly is denominated in US dollars. So you have an
okay.
obligation to pay us back, regardless of how you took the delivery method of those funds. The obligation is to repay the loan in US dollar basis. Once the loan is in place, we have a couple different thresholds that are important. So if the Bitcoin price decreases, so that the loan to value, meaning the ratio of the loan that you took divided by the total collateral, is at 70%, you'll start to get warnings and say, "Hey Jay, your loan
So let
is."
me just
Uh,
what would the price be for me then?
it
So
roughly, it's not perfect math, but roughly decreasing by, to do the exact math, but it's around like a 30% decrease would get you to different margin call or liquidation
okay.
provisions. Yeah.
Okay, so that would be we're at
Mhm.
85,000 right now. That would be pretty low. That would be dropping below 60K. Okay,
Mhm.
so
That's right.
okay. Okay, so
Yeah.
it'd have to drop below 60K. I don't
Yeah, that's
really
right. And,
think
and
it's
that's an important piece. So we always tell clients to check the LTV of the loan, to look at it carefully because the liquidation price does change based on the loan outstanding, which includes interest, the admin fee that's placed in. So
right.
that factor would change the liquidation price. And that's why we always remind clients to make sure they understand the LTV, check it frequently, and, again, make sure they're building in those factors. And then, so once the loan is active, if the price does decrease at 70% loan to value, they will get a notice that they need to maybe consider taking action on the loan. Nothing happens. Ledn doesn't sell any collateral at 70%. At 75%, they'll get more warnings, more emails coming in saying that they need to top up. And if they get to 80%, then there is a liquidation. What happens in the liquidation is the amount of Bitcoin that they post as collateral is sold for dollars, and the loan outstanding, including interest, principal, and admin fees, is repaid. Now, there will be a bit of Bitcoin remaining, obviously, depending on the loan to value in that situation. If it's at 80%, there'll be some collateral. The amount of collateral remaining does get returned to the client, of course. So we have no interest in taking anyone's Bitcoin more than the loan is repaid. And just how Ledn makes money is we do not want liquidations to occur. We would much rather have a client active on the loan, happy with the loan, paying us interest, than have a situation where the loan is repaid because we're losing the loan outstanding. And I like to state that because we are aligned in that you want to do everything we can to keep the loan in good standing because of how we make money. We make money from an interest spread being our cost of funds versus the cost that we're getting paid on the platform. And so it's important for us to help the client keep their loan active. During the loan, there is no actually interest payments that are due. So this is a differentiation with Ledn. Some other competitors in the market ask for interest to be paid monthly. So our view is the reason that a client is taking a loan is they're Bitcoin rich at the moment, cash poor. So the thought of taking cash to repay a portion of the loan over time doesn't make sense. We'd rather accrue that interest and allow the client to repay the loan all in one shot when they'd like to. Another important aspect is there's no early repayment penalties for the loan. So the loan is available for up to 12 months. And during that 12 months, they can repay it at any time without penalty. So there's a lot of flexibility there. We make the obligation for it available for 12 months. At the end of the 12 months, as long as market conditions prevail, the loan is automatically renewed. So a lot of clients have had their loans open for many years now. We have some clients that are actually paid in Bitcoin. They operate their entire life off Bitcoin, but they obviously have expenses to cover that are dollar expenses, and they take a loan like every 2 weeks when their paycheck is clearing, and they
Really?
have this like buildup of
Because
loans
they
like
don't wanna
over time.
sell like, this
They
is
never
what I'm
want to
trying
sell,
to
right?
wrap my head
Yeah,
around. Like, yeah,
yeah,
like, how does this okay, I'm very interested in this. Like,
yeah.
how does this is this considered income? This loan? Like, do I have to
The
pay
loan
tax on
is
it?
again. We always have to say, anything around taxes, you have to get your own advice. But
Right,
our view generally is that it's not considered income because you're borrowing against an asset
right.
that you're not selling. So again, in most tax jurisdictions, loans are not income. And we actually have the other. We'll get into this. Obviously in some of the differences. But the nice thing about a CeFi platform like Ledn is we can provide the loan documentation. So a lot of clients, their banks frankly treat them guilty until proven innocent when it comes to like anything that hits their bank account. Sometimes the banks are obliged to report that to the tax authority, and they have to prove actually that it's not income. So we've had clients ask us for our loan documentation to say, hey, I need to show my bank a proof of funds for anti-money laundering purposes. Where did this money come from? And I need to show the tax authority that I didn't get, the income. This is actually a loan. So can you provide us the backup? And we of course all have all the legal documentation to do that. So helpful to be able to provide that client
So
service and
point
back
for
up.
CeFi versus DeFi
Yeah,
basically is
yeah.
what I'm
Sometimes like
sort of
we're
hearing
still
there.
bridging, right? And so
Yeah,
that's where it's like, a DeFi protocol can offer you, a lending agreement to show the CRA in Canada or the IRS. Yeah.
right. What is the interest
Mhm.
rate?
It depends on the type of loan. So they generally range between 12 and 14%. We
Okay,
update the interest rates monthly, and based on market conditions, of course, we're doing our best to bring rates down. And then depending on the jurisdiction you're borrowing from, there may be a admin fee as well of 2%. And so with that, we have two types of loans. We have a standard loan today, and we have a custody loan. The custody loan, we say we do not touch your Bitcoin collateral. It may be posted to third party borrowers. So in some cases, how we source funds, we do have the right to take that Bitcoin collateral, aggregate it, post it in custody, keep it in trust for Ledn and its clients. But it is posted that way, but it's not traded. It's not, relent further than that. We
right,
have another loan that's called our standard loan, and that allows Ledn to lend a portion. It's generally around 25% of the total collateral package, just how the numbers work on how much we have to post to borrow to lend that portion of Bitcoin to generate additional yield on that Bitcoin. That helps us lower the interest rate and pass on, a better product. So we think choice is important. So we offer those two
Which
differentiations.
which one is
So
the 12%
the 12% would be the standard loan, and the
standard? Okay.
14% would be the custody loan. So we're working over time. Those are coming down. We'll have some announcements shortly. We're getting the custody loans down more and more. We'll be closer to the 12 to 13% range.
Yeah,
As we
yeah.
work to get to that. So
And obviously anybody listening to this is gonna, because we brought up the mortgage example earlier, is gonna say, okay, well, like 12%, like that's high interest if you compare it to your
mm,
mortgage. I mean, it depends. I don't. My mortgage rate personally is somewhere around 4 or 5% right now,
yeah.
right? So
Mhm.
it's a much lower rate. But then at the same time, I also say, okay, but a lot of the a lot of the guys who were giving better rates than that blew up in the
That's
last
it. Yeah.
in the last cycle, right? So, we saw what happened with BlockFi and Celsius. Talk to me a little bit about, like, so if somebody says to you, "Whoa, whoa, that's a high rate." What do you say to that? How does that rate work? And do you think it comes down in the future, and maybe even how does it compare to some competitors?
Yeah, so I say it's all about opportunity costs. So, obviously, first off, I want the rates down to come down as well. If we can lower the rates, then we will open up a much larger universe of
Better for your
borrowers that'll
business.
say,
Yeah, totally.
hey, we can, someone says, okay, this makes sense to me at 9. I think the rate makes sense, historically in almost every circumstance when you look at the price appreciation of Bitcoin. So that's the most easy answer is like, okay, go back and you have two choices. Your first. Okay, I'll say one thing first. We don't say to clients that Ledn or other Bitcoin backed lenders make sense when you have maybe other alternative sources of financing. So if you have room in your home equity line that you can borrow at
Mm.
5%, do it. If you have room on a personal line of credit that might be, unsecured at, 7, 8%, do it, right? Maximize and understand your own portfolio first. Let-in loans make sense when you've exacerbated other sources of financing and you want to collateralize and use your Bitcoin position to do that because let's face it, the banks will not lend against Bitcoin today. That's why we're here. It makes sense in the use case that says my alternatives are sell this Bitcoin, maybe pay capital gains tax, depending where I'm located, and lose all upside in my Bitcoin forever, or collateralize my Bitcoin with a loan, maintain that upside, generally defer capital gains today, and take that loan instead. So that's the use case that we're playing in is that universe where, hey, the Bitcoin price has appreciated massively over the last several years. If history repeats itself, it will continue. I take a long-term view that Bitcoin price is going to several hundred thousand, millions, 2 millions, depending where you sit in your belief spectrum.
Are
And
you,
for
are you,
that
are you,
reason,
are
I
you
will
Michael
never sell.
Saylor bullish?
I am on a longer
Like,
term view for sure.
yeah.
Like I think that's the nice thing is like, for me, this is a, 10-year asset, right? So it's like, that's why like put yourself in a position where you don't need to sell. And that's what we're trying to do at Ledn is solve that use case and not say, but there may be situations where, maybe someone has some credit card debt and that is at higher interest rates that it might make sense
Mm.
to
Yep.
consider taking a Bitcoin backed loan to
Yep.
do that. But we're not competing with traditional real estate mortgages. But again, keeping in place the universal buyers is that exists in the US,
Yeah.
right? Like,
Yeah.
talk to a Colombian, talk to, someone in, another market about walking up and trying to get $1 million real estate mortgage. They will tell you the rate is, 15 to 20% in their local currency, which may make sense based on inflation of that currency. But again, there's a lot of nuance to it.
Yeah. Very interesting. Uh, okay. So talk to me about CeFi versus DeFi in the lending space, because we actually were looking at a chart on our episode on Saturday of, and I can actually bring it up here. I think I even grabbed it off your, this report you mentioned earlier. Is DeFi is growing at a rapid pace when it comes to lending. And so, where are we at right now with CeFi versus DeFi? Is there DeFi options in the Bitcoin lending space?
Mhm.
And then let's talk about like what happens in the future. Let me just pull up this chart here so everybody can see, because this is pretty interesting. Like, you can see in this chart, everybody's listening and not watching. This is CeFi versus DeFi lending. Is this just Bitcoin? This is all crypto, right?
I believe it. Yeah, it's all
Except
crypto.
for like
Yeah.
stable coins like Maker, Sky wouldn't be included. This, I think that's what a CDP stable coin is. So it was majority CeFi in the last
Hmm.
cycle, right?
Yep. Hmm.
And like, I mean, I think 65% CeFi in the last cycle. And now it's switched and it's
Yeah,
majority DeFi now.
for sure.
Thoughts on that?
So there's a lot to unpack in this question. I love digging in. So there's like, what are the use cases for lending, right? And in 2021, a big use case for crypto lending was something that's not around today, and that was the grayscale Bitcoin trust, arbitrage,
Mm,
right? Where people were lending Bitcoin to create GBTC units on the hope to sell them at a premium later, and then close that trade, which was billions,
which
and that
worked.
was
That trade
completely
worked.
worked for a few months and then went really massively negative,
True.
and was some of the reason that led to the downfall of some of these major lenders at the time, right? And so that was a massive use case of CeFi lending that is not around today. Now we have new types of lending. Now we have the ETFs. There's some interesting things happening there to arbitrage the ETF units, because those still follow traditional rails. There's a couple days requirement for settlement, and so there's that's actually a use case that Ledn helps facilitate today, is creating and redeeming ETF units using Bitcoin lending, which is a much more different risk profile, and different. You're not taking the massive price risk and potentially trading risk that you're taking with facilitating the GBTC trade that exists previously. But broadly speaking, CeFi versus DeFi. DeFi is, obviously done an amazing job by using all aspects of the blockchain for transparency. So you've got this really unique setup where you can see massive pools of crypto assets coming in, being deposited as collateral, and then typically borrowing, other types of assets against that. And an amazing pool. The challenge with it, and something that DeFi yet has yet to solve well, is rate certainty. And so to keep these pools active, when there's an imbalance, they raise the rate to bring in more assets to lend. When there's imbalance the other way and there's too much supply, they cut the rates to keep the pools paying out a nice ratio, which works really well for intraday trading, but obviously can get expensive when the market's in a bullish position. It gets really cheap when the market's in a bearish position, but is not really good at solving the problem of maybe bridging into the real world. So we have clients that say, "Hey, I want to buy a house with my Bitcoin." And having the interest rate change from 5% to 20% overnight doesn't work, right? Like, you might be
That
trying
would
to
be
make an
fun. I
investment.
would, yeah, no thanks.
You're paying this on a maybe a fixed income. So like that's where you need CeFi to bridge it, because CeFi has been really good at providing that certainty, right? What we can do is say, "Hey, pension fund, how would you like to lend against Bitcoin over 5 years?" And that's the type of conversations we're having right now. And
Mm.
can you lock in that rate and provide that certainty for that amount of time, and lock that in? Then we can say, "Hey, let-in clients, do you want to pay a fixed rate for the next year?" And do that. So that's the use case that I see, is like CeFi is bridging longer term, more predictable financing, bridging into real world, and DeFi is doing maybe a better job of providing that intraday trading in and out. Another aspect is, for the most part, we're talking about Bitcoin here. Like Ledn is a 95% Bitcoin company, and Bitcoin is not easily bridged to DeFi, right? You have to wrap it to participate in different protocols that typically sit on Ethereum, and in most jurisdictions, that's a taxable event. So if I want to use my Bitcoin and, for example, convert it and use it on Coinbase's new protocol with Morph lending, you're converting your Bitcoin to a wrapped version of Bitcoin in this protocol. And again, in most jurisdictions, that may be a taxable event. So it's not hitting the use case of, I want to defer my capital gains. So that's a massive change there too. So a lot of important details. I always say, like, again, what's so nice about the space is there's so many innovators globally building new solutions every day, and clients have choice. And not only it's not one or the other. You might want to try. Okay, I want to try some DeFi lending. I want to try this new protocol, and I want to compare it against Ledn or Unchained or other more centralized counterparties, and see what works for me, right? And that's what's great, is we're in the business of providing optionality, and I hope clients can spend the time to do the research and figure out what works best for them.
Okay, so because you're my friend and I'm considering this Bitcoin loan, I'm going to look at Ledn. But who else would be worth looking at? If I wanna look at some DeFi options or some other CeFi options, who would you be worth looking at? And I know you're gonna tell me
Yeah,
that I
yeah.
should do Ledn, but let's, you know, let's
Course. Yeah, yeah, yeah. No, I mean, look at the CeFi level. I mean, I mentioned Unchain, so they have an interesting solution where you use multi-sig to post Bitcoin. Arch Lending is a new competitor that's popped up in the U.S. as well. They have an interesting product as well to consider. Nexo is a company in Europe that's been around for many years. They support many different crypto assets. They have a lending solution as well. There is a universe of that, and then on the DeFi side, there's Compound, there's Aave, there's Coinbase's new protocol with Morph. So several different, and then there's I think there is more lenders kind of on the that are new up and coming. But I would look at many things. I would say how many years of experience do you have? Where are you based? What is the team like for support? What aspects do you offer for transparency? So Ledn has a proof of reserves report that we put out every 6 months that shows that our assets are greater than our liability. And again, how do I make sure I keep my Bitcoin safe? What is your experience in the space? What's the dollar volume of lending that you're doing? I think there is value
what
in
I should
numbers.
have asked
Yeah,
that. What
yeah.
dollar value are you guys doing?
Yeah, so we're doing approximately 100 million of originations every month now. So in the first quarter of this year, we did 304 million of new loans across again the first quarter. So seeing a ton of volume come in and
How does
excited.
that
Yeah,
compare to, to like the past year? I'm
yeah.
curious if you are affected by market prices or are you
Yeah.
just seeing growth?
Well, interestingly enough, we obviously had a run up with Trump's election last fall, and so
Okay,
since then we've seen very high volumes. But as April has obviously recovered a little bit post the tariff issues. March was a sideways month, and March was one of our best months ever. So despite that coming
interesting.
down a little bit, I think people are really, really starting to understand the use case for lending, right? And it does work in a sideways market. It works in a market where obviously the price is appreciating, and you of course don't want to sell. It works in a sideways market where you don't want to sell because you think you obviously have some appreciation later. It works in a down market because you don't want to sell at a loss. So it kind of is one of these things for all market conditions. What I always want to make sure we tell our clients and partners is make sure you have Bitcoin aside for a rainy day, right? We do not want to liquidate loans. So
Mhm.
make sure you do understand the risk profile. You're comfortable if Bitcoin does contract. You understand how to deal with it. You keep the Bitcoin that you may need to top up available.
Because if you do need to top up, you top up in Bitcoin.
Yeah, exactly. We do have a feature called auto top up. So we have a transaction account that you can put Bitcoin in that, if you want to make sure there's Bitcoin available, you can turn on that feature that actually automatically moves additional Bitcoin collateral to the loan. That's an interesting feature. But yeah,
Mhm.
and then to give you kind of like, quantify the growth, we're 1.5 billion of assets overall on our platform today, and that's 140% up from the year before. So we've
Wow.
really, really
Yeah.
recovered. Our company is profitable. We're proud to reach profitability now for almost coming up on close to 18 months. So the company is in great financial shape, and it's really been an exciting rebuild from the post FTX events.
Mhm, mhm. Yeah, yeah. It's just it really does feel like everything that is not only is Bitcoin such a strong investment right now for everybody listening in, but also everything that's happening around the Bitcoin economy. And I know that there's not a lot of investment opportunity there. I mean, you can invest in some of the DeFi lending platforms that you mentioned, but it feels like you can't, you got to pay attention to this space
Mhm.
because
Yeah.
there's just, and if you're a builder, like there's a great opportunity, just taking traditional financial products and then enabling them for Bitcoin is like we're so early, so early.
Yeah. You know what? Like, I found this so fascinating as I started to get into it. So, like, one of my frustrations coming from the energy and infrastructure space was most of my work was in Canada. And we were so, boom or bust based on the government in place, based on the current policies for renewable energy, at the municipal level, at the provincial level, at the federal level. And when you're building a Bitcoin business, you finally get this opportunity to say, like, the market is global. And yes, the US is hot right now, but maybe that'll change in a couple years, and the Middle East will be hot, or
There's
Southeast
always going
Asia
to be
will be hot. There's
somewhere. Yeah,
always
yeah.
somewhere that you can grow your business,
Hmm.
and you can hire anywhere. You've got like millions of builders around the world saying how I can use this unique asset. And because it is the same, like, I can't stress that enough, right? I was building a power project in Canada, and then I tried to do something in the Caribbean, even though there's more sun in the Caribbean. It's harder to do because of regulations and property rights and all these things. But like, when it's just Bitcoin, it adds so much simplicity to what you're trying to do, and such an amazing opportunity to think about it. So that's the thing, is like, people are nervous about buying real estate in Canada right now because of the state of the Canadian economy. But when you think about a building, like, again, we're getting to this place where I think we're way past that. Like, Bitcoin is not going away, and therefore Bitcoin businesses are not going away. So you don't have to worry about this. Like, okay, I'm so micro in what I'm attaching myself to because of that, right? Like, I think, and this is changing. I think like 3 years ago, people would not have thought twice about investing in a real estate related business in Canada, but now they are.
Hmm.
Right. Because
Hmm.
again, like, it's going to take a long time for things to reset and things to get back. But you can bounce around in Bitcoin and take advantages of different jurisdictions that are attractive, and you've got this nice balancing aspect.
Well,
So,
and if we go through, who knows what happens in the macro side right now, but if we go through this shift in monetary policy and global trade, and we move more towards more protectionist government and more manufacturing onshoring, if that comes and that happens, which will take years, where does that all lead to? That leads to the main outcome of that, in my mind, is a lot less investment in America and American
mhm,
stocks, right?
yeah,
And a lot more capital that is prepared and looking for a, an asset that they can invest in. And gold is the obvious one, and then it's Bitcoin. Like, it's just
yeah,
it's so
exactly.
my I feel like, and everybody listening will know this because you guys have heard me talk so much about, like, my interest in Bitcoin in the past 6 months has skyrocketed, and it's not that I wasn't interested before. Do you know what I mean? Like, it's like, it sounds like a weird thing to say as if I only just found out about it, but it feels there's a moment happening right now around Bitcoin specifically. Crypto, yes, not I'm not saying it's not only. I mean, also Solana, Ethereum, very exciting. All the things happening there. Stable coins, huge, fascinating, like big. Don't get me wrong, I'm not downplaying that, but there is so much happening around Bitcoin that's just so exciting. Adam, absolute pleasure to get you on the show today. So fun to
Thank you
you
so
out.
much, Jay.
Yeah.
Yeah, I really enjoyed it. Yeah,
Yeah.
so nice to see you again, and yeah, congrats on everything that's happening with Milk Road too. Great to see you doing super well.
Appreciate it, my man. Appreciate it. Everybody listening in, we will link to Ledn in the show notes if you want to check out getting a Bitcoin backed loan from them. Have yourselves a wicked awesome day. We'll see you back again tomorrow.
Cheers. See you later.
Wow, another great show. Thanks so much for listening in, everybody. Before I let you go, I've got to tell you about a new documentary that just came out called Vitalik, an Ethereum Story. It is an incredible documentary made by some award winning filmmakers that follows Vitalik around the world, which is just wild to follow this billionaire that does not live like a billionaire. And you guys, you just got to check out this doc, not just because of Ethereum, but also because of how interesting Vitalik is and the way his mind works and the stories of his childhood. It's just incredible. And also, this documentary is a great documentary for not just crypto people. So if you're hanging out with your friends, hanging out with your family, and you want to introduce them to crypto, this is a great documentary to learn more about crypto, learn more about a very interesting person. Highly recommend it. Check out the link in the show notes to go watch it today. Thanks for listening in, everybody. Have yourselves a great day. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.